YouTube, so that majority of us who will be connecting through YouTube will also not miss the meeting. Thank you for your understanding.
Sometimes people get confused by it, but I feel like the Lord's all over it tonight. I want to read it to us. There's now the tax collectors and sinners. We're all gathering around to hear Jesus.
Sorry, gentlemen and ladies, we're so sorry. We're having some challenges connecting with our YouTube. Please, let's make sure that, because that's where majority of us will be connecting from. So we want to ensure, please, that we get that one sorted out. Thank you for your understanding. Okay, ladies and gentlemen, I am very sorry. Those in YouTube are not responding to me, so I'm not too sure whether they are really hearing us or not. However, I am very sorry. We will need to start right now. Maybe for those of you who will miss it, we'll try and find how to get our Zoom webinar account to allow you people to watch it between today and over the weekend. It is a very important topic. We've spent 5 minutes, so I am going to continue right now without those in YouTube. I don't know what's happening. Our YouTube account is not connecting. Good morning, ladies and gentlemen. I welcome you to this fourth day of Dsap set 31. And this is our second day in business management skills training. My name once again is Pastor Paul Ngolisa. I will be taking us on a topic that is also very important, one of those key success factors of businessmen. Those who have succeeded, there were a few things they've done right that we need to learn. So just give me a few minutes while I connect and share my screen with you. Okay, today we shall be looking at basic business bookkeeping. You know, as the word sounds, bookkeeping is just all about keeping books. It's all about keeping records. We will just go straight into it and see what God will have us do. So we'll be looking at three core areas today in this our study. The first thing is the overview, okay, of business bookkeeping. The second is why business bookkeeping. And then the third will be rules for business bookkeeping. The overview, they say bookkeeping refers to mainly the record keeping aspect of accounting. I want to inform us that all we are learning today are basic. If you want to learn the detailed accounting for business entrepreneurs, you will need to attend our Dsap Business Academy, where such topics are treated in details. It's also free. Okay, when you search Dsap Business Academy or search our Dsap website and make inquiries, you will find out when we have the next one. Okay, so we said here that back to a topic today. Bookkeeping refers mainly to the record keeping aspect of accounting. It's essentially the accounting process of recording all information regarding the transactions and financial activities of a business. What are we saying? Bookkeeping is simply record keeping of your financial transactions. In business, this is one of the areas where businessmen, particularly startup, they believe that their transactions are so small, the figures are so small, they are so infinitesimal that it is not important to record them. Every dime is important. Every dime is important. So learn to keep record. Learn to keep record of all your intakes and payouts. Okay, so why do we need bookkeeping? We need bookkeeping for first and foremost to know our total business turnover per time. What is turnover? Your total sales. Your total sales. If you are, I want to use bread making today for most of our illustrations. Okay, you say, for instance, that you produce 100 units or loaves of bread, a type of bread. Can we just call it fruit bread? 100 loaves of fruit bread. That's what you produce. And you have chosen by your pricing strategy to fix it at 300 naira per loaf. I'm using naira because we are in Nigeria, so it could be any of your own currency. All right, so if we say that we are producing 100 loaves of fruit bread and we sell each loaf for 300 naira, it simply means that we have 30,000 naira. That's our total business turnover or our total sales. All right, so it's important that you need to record. If you don't record that you produce 100 units and you will sell at 30 naira, at 300 naira, how do you know? How do you achieve the fact? How do you know that you are making a turnover of 30,000 naira every day? If you multiply that by the number of days you do it in a month, it will give you the figure, your total turnover for a week, for a month, for 3 months, for half a year, 6 months, or for 1 year, and so on and so forth. So the second one is that it also helps you to establish total sales and total expenses. We've told us that total sales is equal to turnover. We already know what it is. It is the total cost of all the materials that all our products or services multiplied by the unit price. All right. Oh, okay. So what about total expenses? Total expenses is also the total, the summary, the total of all the cost you incurred in producing that 100 loaves of bread, of fruit bread. Let's just for analysis sake, just say you are spending like 20,000 to produce 100 loaves of bread. If that happens, 20,000 to produce 100 loaves. Okay, the third one that talks about the total cost of each unit of a product or service. Mind you, we said that our total cost of producing 100 loaves is 20,000 naira. That means a unit cost, the total cost of one unit of that loaf of bread, one loaf of bread will be how much? 220 naira. Sorry, it will be 200 naira. Is that not so? A unit price, yes, will be 200 naira. Yes, 200 naira. 100. Okay, 20,000 divided by 100, it's 200 naira. So we now know that our total sales is 30,000. Our total cost is 20,000. And our unit cost per product is 200 naira. Okay, so because you're keeping records, it helps you to arrive at this price. You can calculate. If you're the one who just buys things and produce your bread and sells without recording, the question there is how do you know you're making profit? So the next one is to help you ascertain your business profit. Take for instance, now we already know that our total cost of producing 100 loaves is worth 30,000, and our total cost of producing the same 100 loaves is 20,000. It simply means that our profit is 10,000. I told you we're taking this in at basic level. We're not talking about whether it is a gross profit or net profit. Why? Because we have assumed all costs. All right, all costs is 200,000. That means our profit for that 100 loaves of bread that we have, fruit bread we have produced is what? Is 10,000 naira. Record keeping, bookkeeping helps you to achieve that. Okay, number 5 point here, why we need to keep records of financial transaction. The fifth one now is for us to be able to distinguish cash sales and purchases from credit sales and purchases. What are we talking about here? We know that when we produce, some of the products, some of the raw materials we bought, it's possible we paid cash for some and bought some on credit. The same way, when we sell, the 100 loaves we sell every day, it's possible that we sell like 70 of them for cash and 30 of the remaining 30 on credit. So your credit sale, when you minus it from your total sales, it will give you the cash sales, or vice versa. When you deduct your cash sales from your total sales, it will give you your credit sales. That is the money that people are owing you. The debtors are owing you. The same thing it is for purchases. Okay, on credit, when you purchase, when you bought raw materials for cash, you pay cash. It is called cash purchases. When you buy raw materials or some of your input on credit, it's also called credit purchases. So you are able to know from your total purchases of 20,000 we saw earlier on, how many of them, how much of it is cash and how much is was bought on credit. Why do we need this? Don't worry, we will find out why we need it in the next one. The sixth item, the sixth reason why we need to maintain a proper bookkeeping record is to enable us know our total assets and our total liabilities. Don't worry, don't get confused by assets and liabilities. These are simple terminologies. Okay, asset is simply everything a business owns that it uses in producing is product and services. Everything it engages. For our bread making bakery, all your mixers, your ovens, okay, your electronic weighing machine, your baking pans, all of these are part of your assets, okay? But these are called fixed assets because you don't consume them as you produce. You use them over time. There are other ones called a current asset. They are the things that you consume each time you produce. Things like your flour, like your sugar, like your butter, okay, and all the rest of your other consumables. So all these form your asset, form your total asset. But everything in your business might not be your asset. Take for instance, if you bought your oven, okay, on credit, you bought it on hire purchase, for instance, and the cost of that oven, you say, for instance, it's 100,000 naira, and you deposit only 20,000 naira, and they allow you to go away with the oven. So it simply means that your asset in that business is 20,000 naira part of that oven, while 80,000 is your liability. So liabilities are what you owe outsiders that are in your business. The things you have in your business. Sometimes some of your liability could be in current, can also be current, like you bought flowers, you bought some of your margarine on credit, you bought sugar on credit. Okay, those things that you bought on credit are called liabilities because they belong to third parties. Until you have fully paid, they are not yours. All right. Okay, so the seventh one, the seventh item here we are considering now is it helps us to understand our business cash flow. Your recording of your transactions will help you to know, for instance, every day, how much do you pay out to your suppliers through your purchases? Or how much do you receive from your buyers through your sales? You can have a record of that. You know, and then when you know that for a day, you will know that for a week. You can also keep a record of that. You sum everything up, every week up to give you a month. And every 3 months will give you a quarter, and so on and so forth. So it will help you to know how your cash flows. Okay, it can also show you where your cash flows. Of all your input, you will know which one you're spending more on. You can know which one you're spending more on. All right, so it's very important to keep a record. Your record keeping will help you to establish your cash flow. Number 8, the 8th item, the 8th reason why we need bookkeeping is very important, tax purposes. When you don't have your records right, the tax authority will tax you based on their own estimation. And many of the time, it's always overbloated. We all know that taxations are based on your profit. But when you don't have a record of your profit, they will only establish your profit. They will estimate your profit for you and tax you based on that. You won't be able to say, no, you have overtaxed me. Why? Because you don't have a record. So it's good to keep your record. When the tax authority bring their tax assessment and you have stayed and checked your record from all your profit, you're able to deduce your profit from your total sales and total expenses over a period to know what your profit is. If the tax, maybe they say it's 15%. If they tax you 20%, you will be able to go and contend that evaluation, that assessment. You can go and contest it. But if you don't have such record, what do you use to what will you use to contest? No, you will only be paying tax authority. You will only be servicing them for what you are not earning. Okay, the 9th one is for business decisions. We need bookkeeping for business decision. I just told us earlier on, you know, if you have your records right, if you have your total sales and total expenses, and you have your daily, weekly, monthly, and quarterly, or even annual records, when you look through those figures will speak to you. Sometimes it will help you to know where or who you are paying more It will help you to know which of your total clients or customers that are buying more from you, because your record will show. Your record per customer will show who are your main customers, who are your key customers. It will help you now to make up decisions, to make some business decisions. Sometimes you observe from your record that your product is seasonal. There's a period when you are struggling to catch up with demand. Meanwhile, there are other periods where if you're not careful, you produced, and there were so many returns over a period. Okay, so if you know that record, when it comes to that season, you will reduce your quantity you're producing. Otherwise, you continue to have wastages. Wastages are simply, they will add to your costs, which will eat into your profit. So it's very good that you keep records. Your figures speak to you. They speak to you if you can look at them. It will also help you to know which of your expenses is hitting you hard. Sometimes, when you discover that this is what you can go and renegotiate, or you can look for another source of those purchases. I mean, if you're buying from a particular customer who is so uncompromisingly high in their price, you can go elsewhere. You will not know unless you keep records. So record is one of that things that helps you to make that. Okay, so when you have known all this, now the question there is, how do we keep the records? How am I sure I am keeping the proper attention record for my business? Now let's consider the rules. Rule number 1 is that you record all transactions. It's already given from all I've said. Every transaction you ever get engaged in your business, record them. No matter how small, no matter how large, record them. Everything that took money out of your business or brought money into your business, record them. Keep a record all transactions. Keep a record of all transactions, no matter how small. You know, sometimes people don't know how much they spend. They spend on calling credits. Just take time each time you load your phone. Okay, if you're on pay as you go. Okay, each time you load your phone, record it for your business anyway. Record it, and at the end of the day, you add them up. End of the week, you add them up. You'll be amazed what that information will give you. The second rule is separate your business fund from your personal funds. There is nothing as dangerous as mixing your personal funds with your business funds. You know, they said that particularly for startups, legally, the Bible said it's the same person. Okay, if you don't have a limited liability company, okay, they say legally the company and the person are the same. So some of us now have taken it as a reason to keep all our funds together. No, keep your business funds from your personal funds. Each time your business is running out of money and you need to give money from your personal account, record it as loan to your business. Document it. So when your business has a profit rebound, you can pay yourself back that loan at most. You know, at the least give a non-interest bearing loan. And sometimes you charge loan because you're moving that money from account. If you move it from an account, at least you charge the savings interest rate. Okay, so separate your money. It is most dangerous, particularly for people who start baking bread in their home. You use the gas in your house or use the electricity in your house. Okay, all the gadgets, all the equipment are the things you have in your house. And then at the end of the day, you will only add the cost of a few of those current inputs, you know, like your flour, your sugar and stuff. And sometimes you run out of sugar, you go to your house, to your stock in the house, your family sugar, and take part of it, and you don't record it, and you would think that your business is cheap. Your business is not cheap. Your business is not, no, you are only understating your expenses, and it's going to come haunting you in the future, because you might be selling at a loss and don't know until your business moves away from your house before you will realize it. Okay, so the third reason why we must, third rule is that we must bank all sales. Okay, we must bank all sale proceeds. We must every money, every sales you make, put the money in the bank. Don't spend money. Don't spend money from the cash they just paid you. Take the cash, go pay them into your account, and every expenditure, draw them from your account. Let me tell you one thing it does for you. You will never lose track of any funds. That's one simple way to keep your record. Anytime you pick up your bank statement, you can add up all your expenses, match them with your record. All right, because sometimes in the heat of business, you might forget to record in your cash book some of the sales you made or some of the expenses you made. But if you can see your bank statement and every expense is withdrawn from the bank, at most, when you're withdrawing a bulk sum for several expenses, keep a list of those things, all right, and attach them to your withdrawal document. These 10 items I am buying, okay, you can tag them to a particular withdrawal. So make sure that you bank all your sales and you withdraw from your bank all your expenses. That is rule number 3. Rule number 4 is reconcile your cash book against your bank statement of account at least once every month. Do them monthly. Why? Banks, they are run by human beings. Okay, they make mistakes. Sometimes they post the deposit you have paid, you have made into your account, they post it to a wrong account. So if you don't check your account, if you don't reconcile your cash book and your bank statement, you might not know the funds that are missing. Sometimes a debit that was made for another account can be thrown into your own account. So it's good to keep bank statements, bank records. Okay, I didn't mention that from what I've said, you can infer it that one of the best things to do once you start a business, go and open an account for that business. Okay, open an account for that business. So it will help you to lodge in all your deposit, all sales proceeds, okay, and withdraw all your expenses. It's even easier now. You don't even need to issue check in most of the places. You can just issue transfer to them right away. Okay, so it's good that you reconcile your statement of account, your bank statement of account against your cash book so that you're sure that two of them are up to date. Rule number 4 is that, say, engage an auditor or an accounts clerk. Okay, as soon as you can afford it. Don't go and engage them when you can afford it. Continue to do it yourself at the beginning until such a time where your business has grown. It's grown beyond your capacity to run that business and keep these records. Engage an auditor, okay, or an accounts clerk. That will help you to ensure that your records are kept for the reasons we have mentioned earlier on. The next is that review your reports periodically. Review all your periodic report. What do we mean by that? Your bank statement, after they give it to you every month here in Nigeria, or sometimes you can make on the spot demand, all right? But usually statements of account are issued every month. When you have it every month, review it and keep it somewhere, file it somewhere. Okay, next month, the one for next month, file it on top of it. And that way, sometimes when you look at those bank statements, it will speak to you. You will know the month you're doing more business. You will know from your turnover. Sometimes you will see that you have so much money that you're not using now. You don't need to leave them if you run a current account. You can move them into interest earning account if you review your statement from time to time. Thank you so much. I hope today's lessons has been useful to us. Please, for those of us who possibly couldn't watch this session through YouTube, we apologize, but we're going to share the link before the end of the day in your classroom, in your class platforms, so that those of you who missed them can go and watch again. Thank you so much for your time. God bless. So we've come to the end of our business management skills training. We should be getting ready to go to our classes right now. Please don't forget to log in with your name with which you registered. Thank you so much. and God bless.